Okay, good morning. We're going to get right into the stock market technical analysis. We'll start out with the broad market indices. We'll go through gold and oil. I'm seeing a few trade ideas and setups across the board in a couple things. So I want to point those out. Starting off with triple Qs. All right, looking at the daily chart, we are rallying today. At the end of the day, if I go to the hourly, you can really see that we're just kind of chopping around basically. Moving, up and down. Now, I did point out yesterday that on the 60-minute chart, there was a slight bullish divergence. Let me kind of grab that line, see if I can get my line tool here, right there. And I did want to, point that out. That has the possibility for a little more upside. Now, we have some resistance right here at about 348.50-ish. Down to about, it could be down to about 347.50. Just the benefit of the doubt, 347.58 it looks like is right about there. So that's kind of your near-term resistance. And if we break that, then obviously, again, we have a gap that's way up here at 360. All right, there's a gap up there that's never been filled. We could possibly go on to fill that gap. All right, so in the past, when we were rallying right here, I thought that, we had the potential to run up and fill that gap, but I didn't think we were going to. And that is exactly what happened. It did sell off, but now we're seeing this rally. So maybe this rally, maybe this plays out for a gap fill. Near term, I don't really know exactly where the direction's heading. I mean, if we're going to go fill the gap, that's an objective area to short. Otherwise, I'm looking to break the most recent lows, about 336.20. And that should bring us down to about 318 on the chart. So kind of rolling out, you'll see here that basically we're kind of in between what I deem as kind of, resistance up here at that gap fill and support. And we're just right there in the middle. So whether we go up, in the short term, I don't know, or down. The divergences are playing out so far, the bullish divergence on the 60-minute chart to the upside. So, maybe we go up and fill that gap, but short term, I don't know. And again, that's one of the reasons why I don't like to play options, because the time element, it's hard enough to pick the direction and get the direction right. And it's just infinitely harder to pick the direction and the time right. So from my perspective, I prefer to just go long stock or sell short stock. So bigger picture, looking at the daily, again, we're just having a small bounce. I still think we're heading lower over the longer term, medium term. We got to see these lows get taken out, 318.50. If those get taken out, we should head straight down to the next target, which is about, it's about 298 to 300. Right in there is the next profit target. So that's it. Bounce today. IWM, small caps. Again, on this one, we've got the resistance zone at about 209, and we've got support down here at about 1. Yeah, it's really about 192.50, and we're just chopping around. All right, so right in the middle, short term, I don't know which way it goes. We need to see the lows get taken out in order to confirm more downside, and at the highs here at 209, that's resistance. So that's it. SPY on the daily chart, bouncing today, but still below the 200-day moving average, still below the major bull market trend. So if I go to the weekly chart here, marked in red here, going all the way back to 2009, here's your bull market price channel. And again, this is the trend line that's really been pivotal for quite a while. Rejected here in 2018, rejected on COVID, recovered it in 2020, but then we're back below it. So again, nothing's really changed, bigger picture. We are just bouncing today. I think over the longer term, we should continue lower. Okay, oil. So oil futures, I'm looking at the CL oil futures on the daily chart, clear uptrend line right here. And we don't really have negative divergence, but we do have a break of the trend line. We broke back on April 6th. And you can see we basically just came up, did a back test. And today we're getting rejected so far relatively impulsively off that trend line. So I think that's setting oil up for a pullback to about this 85 area in oil. The 200-day moving average is right there moving up. I think we're going to come in about 85, and that's likely your next area to buy oil. But that should put pressure, as if oil is going to continue to correct and have a correction, we should see some of these oil refiners and energy plays actually have a correction as well. So DVN, I'm really watching this one. Again, this one has been building big negative divergence for a while on the daily chart. You can see it right there. I've got it kind of marked out. And we are in a bearish rising wedge pattern. We just need to see a breakdown of the wedge, some sort of an impulsive breakdown. Earnings are coming out. Maybe it happens after earnings, but we need to see that impulsive breakdown. If we get that, we got a minimum target of about 50-50. We've got another level of 45-45. And then obviously the 200 days. So I think that's probably going to be your target, about 45-50 or so. Just need to see that breakdown. And financials, they're still holding that 37. You could see yesterday it was just we were just battling with that 37 level all day. And that's been the case every time it's hit 37. That's where the buyers are at. So at the end of the day, we need to see 37 break. We need to see an impulsive breakdown, not just by a couple pennies, but a nice solid breakdown of that 37 level. And that would be a key signal that the financials are going to continue to break down. Today we're sitting at 37.47, so no change, just bouncing off of that support. KHC, this is a long trade. It continues to grind higher. Nothing super impulsive, but this is a defensive play, and it just continues to move higher towards this gap fill target up here at 48, 47.95 or so. So that gap comes from back in 2019, and you can see they made it look like it was about to fill right here, but then it failed, had a big correction, and now we're just marching straight up. So very probable that we're going to continue higher and run up and fill that gap. That's our target for right now. Again, I wouldn't wait for the exact penny of that gap fill. I'd probably step in a little bit early, maybe around 47, and just close out the long position. But that is the target for right now, is that gap fill, and it's continuing to work. So we're just letting that thing do it, continue to move higher. ABBV continues to work to the downside. This one's down about 2% today. Still haven't hit our first profit target, which I'm seeing at about 150.85. But we are continuing to work our way lower. Looking at the hourly chart, just moving lower. So still looking for that first hit, and if we get it, then that's going to be, if you took the trade on the sell signal right here, big impulsive breakdown, the first target's about 5% to the downside. Next target is about 13%. So we're continuing to let that thing work. Moving on to UPS, this one, bouncing a little bit today, but at the end of the day, if you just look at what's really going on, we're just chopping around in what seems to be a bear flagging pattern. So we basically have a big flagpole right here. We're creating this kind of flag pattern or pennant pattern like this. And then it's, projecting that we continue to the downside. And the target right now is actually projecting us down around this 156.50 area. So again, we'll probably get a bounce or a reaction here at 177.71. But the target on this flag pattern is all the way down there. So just, we just need to see the continuation to the downside, but it's just continuing to flag out. This one, UNP, same kind of deal. I pointed this one out a while ago. This one has a nice clean uptrend line off the March 2020 lows. Clean uptrend line. We had a sell signal or a break of trend right here. And ever since then, we're just kind of flagging out. So we could run up and back test, but that sell signal is still intact, and that tells me that we're likely going to continue to the downside, relatively soon. We have also a bear flagging pattern. Same kind of thing right there. You've got the flagpole. There's the flag. And we are, just looking for that continuation to the downside. This one sets us up for a move down to, somewhere here at about 216.23. So we can kind of mark that out somewhere right in there. All right. So I don't see any reason to get out of this one. I'm still short this one. I think it's still heading lower. We just have to let it, do its thing. It's up 1% today. TSM, you'll see here, just pretty much flat today. So all the rally, the market's rallying a little bit, but these trades that I pointed out are still looking fine. So this one is a short trade. Obviously, on the daily chart, you can see we do have some slight bullish divergence. So I do want to point that out. You'll see it right here on the RSI and the PPO. You have, we did make a slightly lower low right here in price, and yet momentum's moving higher. So, that could signal a rally, maybe even a back test or a gap fill. There is a gap up here on TSM, which is sitting at about 115.92, and the 200 days hovering right there. So possible, all right? I don't want to throw that out. These divergences are in play, and so we could rally up and fill the gap, and then, test that 200-day again and then fail from there. Just, keep an eye on it, and if you don't want to ride that up, if it starts looking like it's going to do that, you could always just cover the short trade and maybe reshort it up there if you get it. Otherwise, bigger picture though, we should continue lower. We have a support level, a minor gap to fill here at 93.84. So maybe we dip down and fill that. And then we've got some support down here at 76.77. So I guess if I had to lean anywhere, maybe we're going to run down, fill this gap here at 94, keep the divergences, and then maybe see a rally. Okay, I'd say that's likely. But yeah, that's it. So I'll probably cover my trade here at 94-ish. If it does run down and fill that gap, I'll probably cover the short trade and then maybe see if these divergences play out for a rally. And then I'll look to reshort it if we get that bounce back into the 200. So that's kind of the game plan that I have for this one, at least for right now. Gamestop, so far today, it's pretty much an inside day. So yesterday, pretty good sell-off. Today, they're just bouncing it, but we're just an inside day. This candle so far is within the range of yesterday. So that's just noise, basically. Typically, inside days are just continuation. You want to take the larger trend and go with the larger trend on the inside days, not a reversal pattern. So as of right now, I see the trend being down, and we should continue lower. We've got some support here at about 131.75. You can see that's where we had several reactions. That's a key level of support. So if we break that level, we should continue pretty impulsively to the downside. But right now, 131.85 needs to go. And to wrap us up, keep an eye on these bonds. TLT continues to sell off, and that means interest rates are continuing to rise. So rising interest rates are bearish for tech stocks, growth companies, and the economy in general. So keep an eye on this. The more that this sells off, the more that we're likely going to see impulsive breakdown in the market, and it's going to be a quick sell-off. So today's kind of a bounce day. We're saying, the market's rallying, but bonds are not confirming that. We are seeing bonds continue to sell off. So that is, oftentimes these bonds will sell off, and, the market might rally right before a big move down. Very similar if you want to go to triple Qs, and look at the COVID crash that we had, or even the SPY. But look, I think it's very possible that I'm not saying we're going to get a big move down like COVID, but we could have kind of that first initial leg down, maybe something like that. And you can see that leading up to that, we were just kind of rallying higher, just right up into that. So it's possible we're right in this area right before this big move. All right. So I don't see any indication of changing my positions, although in the short term, maybe we get a continued rally in the growth stocks, triple Qs, IWM. But I still like selling the rips in tech and buying the dips in gold, even though today is kind of a counter trend, going against that. We're rallying today in tech and gold's kind of selling off. I still think that's the opportunity to sell the rips and buy the dips. So I'm going to wrap it up here, guys, and I'll let you know if anything else I see throughout the day. And I will catch you on the next one. Bye.